Hello and welcome to CN Professional Institute. This is the question and answer session of Ifrs 15 Revenue from Contract with Customers. In this video, we are going to solve two more questions. We'll solve question 10. Then when we are done, we'll look at question 13, right? Question 13 is on agency. Okay, so when the agent sells on behalf of the principal, how much revenue will the agent record and how much revenue will the principal also record, right? And what happens when the agent is yet to remit the money, the proceed, everything to the principal, right? And what happens after the agent is done remitting the revenue or the cash to the principal? How will it change? Right. So we'll look at one question on agency. Right. Okay. So let's start with question 10. Let's solve question 10. Right. So it's question 10 says the following information is extracted from the books of Miss Eddie Construction at the end of September 2018. So date commence, they started the construction on 1st April 2016. Expected completion date is 23rd December 2018. That's when they expect to finish everything. Total contract revenue 2,900,000. Cost to 30th September 2018 2,104,500. Value of performance obligation satisfied to 30th September 2018 is 2,300,000. Amount invoice for work certified to 30th September 2018 2,100,000. Cash received to 30th September 2018 1,940,000. So 1,940,000. And then estimated cost to completion at 30th September 2018 is 206,000. Right? And we're told that Miss Eddie calculates satisfaction of performance obligation based on work certified as a percentage of contract price. Work certified as a percentage of what? Contract price. And this is the output method. The output method. Work certified as a percentage of what? Contract price. Prepare extract from the statement of profit or loss and statement of financial position as at 30 September 2018. So we are pairing the statement of profit or loss and the statement of financial position as at 30th September 2018. As at 30th September 2018. Right, so let's start. So let's go. So question 10. Okay. So question 10. So we said first of all, the first thing we do, okay, is we look at the overall profit or loss to check if we have something we call on-loss contract, right? That's the first thing we do. We check for overall profit or loss. So we are going to follow the same process, okay? How we solved the others, and then the step we have to go through. So the first step is to check if there's overall profit or loss. If we have overall profit or loss, okay. So how do we check if we have overall profit or loss? We compare the total contract price to what? The total cost. Okay, so what's the contract price? So in the question, it's here. The contract price is what? 2,900,000. So that's the total contract price. 2,900,000. 2,900,000. Okay. Then let's go and look at the total cost. So our total cost will be the cost to date plus cost to what? Complete. We said that's what gives us total cost. Okay, cost to date plus cost to complete. So total cost is cost to date plus cost to what? Complete. Okay, so scan through the question. What is the cost to date? Okay, and then what is the cost to complete? If you come here, this is the cost to date. Okay, cost to date is here. I don't know if you can check it. That's the cost to 30th September 2018. This one here, because we are paying the extract as at 30th September 20 what 18. We are paying the extract as at 30th September 20 what 18. So the cost to date is 2 million. This figure here, 2,104,500. 2,104,500. That's the cost to date. And then cost to complete is here, 206,000. 206,000, right? That's the estimated cost to completion at 30th September 2018. So what this what it means? It means that okay, as at 30th September 2018, what cost have they estimated? Okay, as the cost of what completion. So it means that the estimation was done, okay, in 30th September or at 30th September 2018. That's when they did the estimation of the cost to complete. So the fact that we have estimated cost to completion at 30th September 2018 doesn't mean that's the cost to date. Is the estimated. So normally we do estimation of cost to complete at the end of the period. So as at the end of the period that you are paying your extract, that one you know your cost to date, then you estimate that okay, from this date till I complete, I will incur this cost, right? So the 206,000 is the cost to complete, which is estimated at 30th September 2018. So we did estimation at 30th September 2018, right? So that's the cost to complete. So putting the two together, cost to date and cost to complete, what do we get? Right, we just put the two together and we have 2,310,500. So I'm sure you just pick your calculator and then we punch them. Okay, so we have this. So when we did that, okay, the cost to date, I'm sorry, the total cost. When we deduct the total cost from the total contract price, how much do we have as a profit? And here you know that you realize that there'll be a profit. So the contract is not onerous, right? So there'll be a profit of 589,500. Okay, so just punch and see if so just make sure you follow. Okay, pick your calculator and then you work along. Very good. So we have this as the overall profit. So this contract is not onerous, right? So we don't have to do anything. We just have to continue with the other steps. Instead, if it's onerous, you know what we do. We have to record the whole loss immediately, which we've looked at in the previous questions. The second step is to compute our progress, right? Is to compute our progress. And here we say we are using the output method. Why is the output? They are using work certified over total contract price, so is the output method. Now, if you come here, scan to the question. Let's look at it again. This one here, value of performance obligation certified to 30th September 2018, 2,300,000. And then that we have that one. Then we have here amount invoice for work certified to 30th September 2018. This amount invoice for work certified to 30th September 2018 is the amount the customer has invoiced or has billed the entity. Are you following? So the amount invoice for work certified to 30th September 2018 is the amount billed or the amount what invoiced. The figure or the value we use when we are computing our contract asset or what liability, and when we are computing our contract receivable or payable. Are you following? This value here is the value of performance obligation certified to 30th September 2018. So this is the what? The work certified. Are you following? That's the work certified. The value of performance obligation was certified and satisfied. Are you willing? Are you following? So the value of performance obligation satisfied to 30th September 2018 here, it is the word, the work certified. And I told you this here, this amount invoice here, okay, is the amount we are invoicing the the customer. That means a D construction. The amount we are invoicing what the customer. So that amount billed or invoice. And the top here is the value of work certified. Okay. So don't confuse yourself. So we said with the output method, output we said we use work certified divided by what the total contract price by 100. Right. So let's see. So what's the value of work certified? I told this here value of performance obligation certified. Right, satisfied. So that one is 2,300,000. Then divided by what's the total contract price? Now the total contract price is there in the question, total contract revenue. That's the total contract what revenue here. Total contract revenue 2,900,000. So 2,900,000. So we just divide the two and then we get by 100. Let me push this one so I can multiply by 100. And that will be our progress. Okay, by 100%. And then that will be our progress. Now here, if you divide, you get decimals. Okay, if you divide here, you get decimals. So I don't know, you can leave your answer in fraction if you want. Okay, so I have 79 point, I have 79.31%, 79.31%, right? Now, if you leave your answer in fraction or to like 3, 4 decimal places, it gives you more accurate answer. Okay. So the more the decimal places, the more accurate the answer. So you can leave your answer in like 3, 4 decimal places. Okay, but you get the same or similar answer. Then step 3 is we have to recognize revenue. You have to recognize revenue. So we go to the statement of profit or loss, and we said the revenue we recognize will be, we will apply, so with the revenue here, we said we will apply the progress, that's the 79.31%. We apply the progress on the total contract price. Okay, so we are going to apply that on the 2,900,000. Okay, we are going to apply that on the 2,900,000, and then that will give us the revenue to record. Okay, so we apply this on that, and when we do it, we have to get we'll get a figure of like 2,300,000. Okay, or that's 2,299,990. So you come and get the work certified back again, right? So it's because of the roundings, the approximations. Okay, so you should get your 2,300,000. But if you don't get it because of the roundings, the approximations, okay, because we are using the work, we are using the output method, we are using work certified. So if you use work certified to do the percentage and you come and apply it on the total contract price, you have to get the work certified again. Okay. So it's the same thing. So you get 2,300,000. Okay. So this is our revenue. Then let's look at our cost of sales. So as I said, you can also equally get 2 million. Okay, 299,900 and what? 90. It's the same thing. Okay. It's the same thing. I said here because the percentage is decimals. Okay. So you come and get something like, okay, let's say 2 million. So we can equal write the 2 million. It's the same thing. The more your decimal places, the better or the more accurate the figures. So we get 990. Okay, it's the same thing here. So let me use this one here. So we have 2,299,990. Then our cost of sales. We said our cost of sales, we use the cost to date. So if you go into the question, this is the cost to date. That this one here, the 2,100,000. So we have cost to date about to what 2,104,500. So these are cost to date, which we said that's what we use as the cost to date is what we use as the cost of sales. So cost to date is what we use as cost of sales. Cost to date is used as cost of sales. Then our profit will be 195,000. So we have to deduct. So let's deduct and see what we'll get. Okay. So we have here, and then we have this. So that's it, very simple. So our profit will be 195,000, 195,490. Okay, which will be similar to 194,500. That's if you do the roundings. Okay, if you use here 2,300,000 as your revenue. Okay, so we are done recognizing the profit. Let's go and look at the statement of financial position. So we said in the statement of financial position, we record contract assets or contract liability, and then we also record contract receivable or what payable. So let's look at the statement of financial position, what items we are going to record there. So statement of financial position. Okay, so we said in the statement of financial position, we record two main things. Let's do our contract asset. Okay, so let's see how our contract asset will work. And then when we are done, we'll look at the contract. So we said with the contract asset, we compare revenue recognized. And mind you, let me explain this one again. Here in this question, okay, you might think, okay, look at it. When did they start the construction? 1st April 2016. And we append the extra as at 30th September 2018. So you might think, okay, the progress is 79.31%, right? That's the progress. But you see, they have not record or recognized any previous revenue. Okay, you might think, okay, if we start recognizing the revenue, if you record the whole 79.31%, you might think, okay, we have recorded the revenue from April 2016, okay, to 2017. You might think we recorded revenue for the 2017 financial year, and then as well as what 2018 financial year. It looks like that though, because they started on 1st April 2016 and nothing shows they've recorded previous revenue. There's no previous revenue recognized. There's no previous cost of sales recognized. So if we record revenue for the whole 79.31%, right, it's like we are recording revenue for 26 the 2017 financial year as well as 2018 financial year, right? Yes, that's what we are doing. Revenue is recognized based on the progress. Are you following? We are going to record revenue based on the progress, and this is the first time they are recording revenue. So there's nothing, or we don't have any amount that relates to the previous year, so that we will deduct. Okay, there's nothing or no amount that relates to the previous year, so that we are going to deduct. Right? So we just have to record the whole 79.31% as our contract. Sorry, as the revenue. We are going to record all because we don't have any previous revenue recognized or previous cost of sales what recognized. Okay, so even though it might sound or seem like okay, we are recording revenue for more than one financial year in this question because they started in 2016 and we are doing 2018, the year end. We are doing the extract for the year end 2018. You might think, okay, it's seems like we are recording for more than a year, but that's what we are going to do because we don't have any previous revenue what recognized, and then we don't even know the progress as at the end of the 2017 financial year. We don't know the revenue. We don't even know we don't know the progress, so that we apply to get the revenue for 2017 and we come and less it from this one. to get revenue for only 2018 period, right? So we don't know the progress for the previous year. So we just have to record the whole thing here. Okay, so revenue recognized. Okay, revenue recognized is we recorded 2,299,990. This is revenue recognized and it's a first time revenue. Okay, so this is a revenue recognized. Then how do we get the amount billed? Amount billed is in the question or invoice. Okay, so we said to get the contract assets or liability, we compare amount billed or amount invoiced. Are you following? So it's either amount billed or amount invoiced to our total revenue recognized, and then we'll get our contract asset or liability. So what amount billed or invoice, we've looked at it already. We said that's the 2 million. Um, we said that's the 2,100,000 here. That's the 2,100,000. This one, that's the amount billed or invoiced. So it's 2,100,000. So we just have to deduct, and then that will be our contract asset, as simple as that. So we deduct this one here and we get the contract asset. So that's it. Okay, be very careful and know what amount to record and what amount not to record as your revenue and then the amount billed. Okay, so we have this. If you subtract, what do you get? As here, so when you subtract, we are going to have one. So that will be this will be contract asset. We have contract asset. Okay, we have contract asset of, okay, so we said we'll have a contract asset of 199,990. Okay, hope I'm right. Right. So we have the revenue recognized to date minus amount billed or invoiced to date, right? And we said amount billed or invoice, it's here. That's the 2,100,000, right? So if you pick your calculator and you have 2,299,990 minus the 2,100,000, that gives you 199,990. So this is our contract asset. And I'm saying it could also be 200,000 when you make here, when you use 2,300,000 as the revenue recognized, which all will be based on your roundings, the number of decimal places, right? So there's it, or something closer, it's fine. Then we look at the last part, which is contract receivable or payable. Okay, and we said with the contract receivable or payable, how do we do it? We compare the amount invoiced or billed, right? So we look at amount invoiced or billed. So amount invoiced or billed, okay. Then we compare it with the total amount received. That's the cash received from the customer. So what's the amount invoice or billed? It's here. Amount invoice for work certified. And that's how much? 2,100,000. Okay, so this amount invoice or billed, 2,100,000. And then we are going to less the cash received from the customer. So cash received. And how much is the cash received? In the question, the cash received here is 1,940,000. So 1,940,000. Okay. So we less the cash received 1,940,000. And the answer is contract receivable. This one is supposed to be contract receivable. Okay. So we have contract receivable of how much? So the difference is 160,000. 160,000 as the contract receivable. Let me pick my calculator and punch again. So this, I want to be very sure. We have to confirm 1940. Yeah, so it's 160,000. So that's our contract asset, right? So our contract asset is 160,000. So this what we are going to record in our books. And I said this contract asset here of 160,000 is also a current asset. It's also a current what asset. So when we go to financial position, you have contract asset here. Okay, there will be a contract asset of 199,990, and then there will also be contract receivable of what 160,000, right? So that is it with this question, as simple as that. Okay, so let's look at question 13. Question 13. So question 13 says, during the year ended 31st December 2023, Y PLC transferred legal title of goods to S Limited, which cost Y PLC 1 million. These are to be sold at a markup of 20%. S Limited is entitled to 5% of the selling price of all goods sold. As at 31st December, X Limited had sold 90% of the goods and held the balance of the inventory in its warehouse. All amounts had been collected by X Limited, but the company has not yet remitted any cash to Y PLC. How much revenue should S record in its books? How much revenue should S record in its books? So in this question, you realize that S is acting as an agent, selling goods on behalf of what? Y, right? And we were told that X Limited has collected all the amount, but S Limited is yet to remit the any cash toward Y, right? So we'll look at all of this and how to solve or go about this. So let's continue. Very, very simple. Now we've learned that for agency, okay, the agent will record revenue equal to the commission that the agent is taking. What is the commission that the agent is taking? Are you following? We're told that the agent is entitled to what 5% here. Are you following? The agent is entitled to what 5% of good sold, right? So let's start. Let's look at the value of goods transferred from X to what Y. Let's look at the value of goods transferred from X to what Y. We're told that X transferred goods Y transferred goods at the cost of 1 million to what? To Y, right? So this is the cost of the goods transferred. We're told in the question that the cost is what? 1 million. Are you following? Very good. So the cost is what? 1 million. That's the cost of goods what? Transferred. 1 million. And then out of these goods transferred here, so let's see. We're told that there's a markup of what? 20% here. These are to be sold at a markup of what? 20%. So let's get the selling price of the goods transferred from Y to X. Okay, so let's get a profit first. So you realize that we know that markup, to get profit, markup is on what? On the cost. Are you following? Markup is on what? Cost. So here is very simple. We've been given markup and we have cost. We just have to apply the markup on the cost, and that'll be our profit. So our profit will be 20%. Okay, which is the markup? 20% by the 1 million. Okay, 20% of the 1 million. And what do we get? That will be the profit. Then we'll add the profit to the cost to get the selling price. So 20% of 1 million gives us 200, will give us 200,000. So 200,000 is a profit. Are you following? So we can now find the selling price. So the selling price of the goods transferred is cost plus the profit. That's how we get selling price. The cost plus the profit. So the 1 million cost plus the 200 profit, which gives us 1,200,000. 1,200,000. So this is the selling price of good transferred from from Y to X. This is the selling price of goods transferred from Y to X. Now that we have the selling price, let's continue. X, we're told that, so out of this 1,800,000, sorry, out of this 1,200,000, right? Out of the 1,200,000, we're told that X is entitled to 5% of the selling price. Okay. And we're also told that after 31st December, X sold only 90%. So from the total 1,800,000, sorry, from the total 1,200,000, okay, here, from this total 1,200,000, X did not sell all. X sold only 90%. X sold what? Only 90%. So let's get the amount sold. If X has sold all the 1,200,000, would have taken 5% of the 1,200,000 as X revenue. But X sold only 90%. So let's get the amount sold. We know X did not sell all. So amount sold is equal to the 90%, okay, of this figure. So 90% of 1,200,000, okay, and that would be, so 90% of 1,200,000. So 90% of 1,200,000 will give us 1,080,000, right? So 1,080,000 is the amount sold. So it is out of this amount that X will take his what? 5%. Are you following? So we said X is entitled to 5% of the amount of goods sold. So X will take 5% of this figure of what? The 1,800,000. Sorry, 1,080,000. So X is taking 5% of the 1,080,000. So 1,080,000, X is taking 5% of it, right? And that will give us 54,000. So S is taking 54,000. Are you following? Very good. So this is X revenue. S is taking 54,000. And then the remaining amount, okay, will be Y. So Y will take the remaining. So if X is taking 5%, if S is taking 5%, they realize that Y will take 95%. Or better still, this total revenue, this figure here, this is a total amount of goods sold, the 90%. We said out of this, X is taking 54,000. So if S is taking 54,000, subtract the 54,000 from the 1,080,000, and that will give you Y's revenue. So if you subtract, Y will get 1,026,000. So 1,026,000 is Y's revenue. Are you following? So Y's revenue will be 1,026,000. So we've gotten the revenues that each of them will record. We said X will record 54,000 as revenue, and then Y will record 1,026,000 as revenue. Right. So if you go to their books, that's all. Let's show the entries in their books. So let's look at what it will look like in the X book. Okay. So in the books of X, so let's say books of X. Okay. So in the books of X, we said X will record a revenue of how much? X will record revenue of the 54. Okay. So X will credit revenue of the 54,000. because this will be his revenue. His commission, his 5% will be his revenue. Okay, so S will credit revenue of 54,000. Okay, then we're told that X also sold all the goods. I'm sorry, he sold 90%. So if X sells 90% of the goods, he will have the cash. And we also told that he is yet to remit any cash to Y. And we also told that here, it says all amount had been collected by S. So it means that for the goods worth 1,080,000 that X sold, S took the cash, but he has not given Y's portion to him. So we have to debit cash. He is yet to remit, so we have to debit cash. I follow. We will credit cash when he has remitted the amount to Y. So we will debit cash with the total amount because he has all the cash, the 1,080,000. Okay. So we'll debit cash of 1,080,000 because he has all the amount. I following. And then because he is yet to remit Y's portion to him, he will have a liability as well. Okay. The revenue of how much? The revenue of 1,080,000, the revenue of 1,080,000 that belongs to Y, that S is yet to remit, will now be a liability in his book because he has to remit the 1 million. Okay, he has to remit 1,026,000 to Y. That's Y's revenue. Okay, so what I'm saying is that okay, Y's revenue is 1 million and what? 26,000. 1,026,000. That's Y's revenue. But S is yet to remit the 1,026,000 revenue to what? Or the cash. Y's revenue. He is yet to remit to what? Y. So Y's revenue of 1,026,000 will become a liability in X book. So X will have a liability of 1,026,000 in his books. 1,026,000 in his books. So is that when you do it, it's balanced. The total debit will be the same as the total credit. So we debit S will debit cash of 1,080,000. That's the total amount of goods what sold. That's the 90% of goods sold. Then he is taking revenue of what? 54,000. So you credit his revenue. And then the difference will be the liability because he's here to remit to what? Y. In the books of Y, this is how it will appear. Okay, books of Y. In the books of Y, immediately the goods are sold, Y has the right to record revenue. So Y will credit what? Revenue. Y will credit his revenue because he's entitled to the 1,026,000. So you credit revenue of 1,026,000. I following. And then he will debit his receivables because he will be expecting some money. Okay. So he will debit his receivables of how much? 1,026,000. So he'll be expecting this money from X, receivable from X. So this is how Y's book will look like. Y will credit his revenue immediately the goods are sold with 1,026,000, and then would debit receivables of 1,026,000. This is what happens when the goods are sold and X is yet to remit to Y. If X remits Y, you see, look at what happens. X has set up a liability of what? 1,026,000 in his books. And the cash, he has also recorded all the cash. So if he has remitted Y, or if he remits Y, then the entries will change. He would have to come and credit his cash, okay, with 1,026,000 to reduce his cash because he can't take all the cash. So he would have to come and credit cash with 1,026,000 to reduce his cash, okay, and he will come and also debit liability to cancel this liability here. to cancel this liability set up in the book. So he would have to come and debit the liability to cancel liability so that he has no liability again and will credit his cash. Okay. And then Y is expecting receivable. So in the books of Y, when X will meet Y will now receive cash. So Y will now debit cash. Okay. Y will now debit cash and credit receivables to cancel the receivables in the question, and I mean in his books. I'm following. So let's see the entries when X will meet Y. We said these entries is the entry when S is yet to remit what? Y, or is yet to remit any amount to what? Y, right? When X remits any amount to Y, this is how the entries will be. We said in the books of X, okay, so we said in that case, in X's book, it's not part of the requirement, but I want you to know how it will happen if X should remit what? Y. So in that case, in X book, okay, we said S will debit. Are you following? It will debit if you come here. S has set up a liability of 1,026,000. So we have to go and debit that liability in S book. So we'll debit liability, okay, with how much? 1,026,000 to cancel everything. Then we will come and credit cash because we'll be paying the 1,026,000 to Y. So 1,026,000. So this is how it will look like in X book if X remits or gives the 1,026,000 to Y. And then in Y's book, Y will, so we said Y has set up a receivable, right? So Y has debited his receivable. So now that he's received the money, he will now debit cash instead of receivable. He will debit cash because he has received the money with 1,026,000, 1,026,000, and then so he will debit his receivable with this amount, and he will credit his what? Receivable to cancel it. He has set up a receivable, so he has to cancel the receivable by crediting it. Okay, so this is how the entry will look like if X remits Y. If S, so just get what will happen if S is yet to remit. This will happen, and if S remits Y, here we said S has set up a liability, so S has to cancel liability by debiting the liability. That's what we did here. We debit the liability, and all this cash, this 1,080,000 cash, 1,080,000 cash that X has recorded, everything is not all that belongs to him. Okay, part is for Y, so we have to credit the cash with that amount to reduce it to the 54,000, and then we said Y will now be receiving his money, so we'll debit cash and we'll go and credit we'll go and credit receivables. The receivable setup, how much is it? The receivable setup, we would have to go and credit it to cancel the receivables, right? So this is how the entry will look like when X remits what? Y, or remit any amount to Y. Okay. Okay, so that's it for this session of the question and answer session. So that's it for the question and answer session. So we looked at question 10 and then question 13. Question 13, we said it's about the agency. So that's it. Okay. So that's it for this session of the question and answer part. I'll see you in the next video.